Well, news events and economic announcements can obviously have a big effect on the markets and your trading strategy, but how do you take advantage of those? Our guest today is Tony Hansen, here to talk about that. Tony, thanks for being here.
Oh, thank you. Glad to be here.
All right, so a lot of people think maybe into an earnings reaction or maybe an FOMC announcement that they should anticipate that and get in before. What is the right method to do this?
Well, there's a lot of ways that different people will trade economic data, and we've seen that so much, as particularly recently with all of the global things going on. And a lot of traders are trying to anticipate the reaction to the news, or you'll see a lot of run up ahead of certain news events. The problem is that when the actual news reaction takes place, a lot of times there will be a swing. So you'll see an initial reaction, and it maybe only lasts for a couple seconds, and then it'll swing back down. One thing that you'll notice, though, is that going into a lot of, particularly the popular economic data, you will see patterns start to develop ahead of time. So maybe there will be like a slowing in momentum after a run up. And oftentimes when you get sort of a rounding off at highs, you'll see a sharp downside reaction. But what will happen is right after the news, it will pop for like a few seconds, and then you'll see the follow through. So a lot of traders are trying to play the pattern that they're seeing develop, and they're thinking, oh, well, I want to get in ahead of the news, because they don't want to be trying to jump in when the reaction's actually taking place, but then they get flushed out because of that initial kind of slip up, and you don't know how far that's going to go. So when you're putting like a stop on the books, or even just a mental stop, how much pain are you going to take? And if you're putting something on the books, it can get flushed out so easy. So I will still just wait and play that reaction, and I'll wait for that flush and then try to get in. And sometimes, yeah, you're going to miss the initial move, but a lot of the major events, you'll see an initial move in the direction you're expecting, and then you'll see a little bit of a pause and then a continuation. And so you can get in on that. And that gives you a better reward to risk ratio, because you don't have that chance of getting flushed out as easily. So it's better to wait and play that reaction to the news than trying to anticipate it. And sometimes, it might be a surprise. You might get data that completely nobody's expecting it. And if you happen to try to anticipate it, it can go against you so fast that you just cannot cover without some really substantial losses. So with the Fed announcement, that's a great type of reaction to play, though, because it's so consistent from one meeting to the next. You'll usually have like 3 waves of reaction, and it'll play out. First, you'll see a 3-wave reaction on a 1-minute time frame, or like if you're following like the tick charts, you'll get like, let's say, a flush lower. And then you'll have a counter move. And sometimes that counter move is larger than the initial flush. But then it'll go back in the direction that it was originally indicating. So if you had a downside move right after the reaction, you'll see the counter move, and then it'll turn back down again. So you'll wait for that reversal back down. And then this plays out again on the larger 5-minute time frame. So you'll have the first reaction on that 5-minute will be basically that entire first 3-wave move, and then you'll see the counter move, and again, that can be bigger than the initial reaction, but then it'll turn back in the direction of the initial reaction. And this happens basically every single time you have the reaction to the FOMC news. So that's a really great way of anticipating it and still knowing what's going to happen, and not kind of get stuck into like the really reactionary type of moves.
Sounds like maybe take some practice to do this, maybe try a few on paper, or just see how they react first before jumping in.
Well, particularly if you're going to try to play those first initial 1-minute swings, those can be crazy. A lot of times your systems will start to lock up, the data will be so fast, and you'll get bogged down, and your prices will slip so quickly. So especially if you're newer to wanting to play the news, wait and play the reactions on the 5-minute. And use those instead of just the initial 1 to 3-minute reactions.
Tony, thanks for your time.
Yes, you're welcome.
You're watching the MoneyShow.com video network.